beginning. Oh my God, I have 15 minutes. We can do 15. We can do.
Yeah, you can just start asking me questions.
Okay. Cut.
That's fine.
Hello.
We're professionals here.
Yeah, we're professionals.
Okay.
Welcome to another video of house hunting in Southwest Washington. My name is Andrea Mayhew with Cascadia Northwest Real Estate. Today we're going to be asking questions to Rebecca. This is Rebecca.
Hi.
She's with Guild, and she's going to be asking our most common questions that we get from buyers. So digging into the first one, what we get a lot of is what's the difference between a pre-approval and a pre-qualification?
So, because I only do pre-approvals, prequal is more, I believe, that they run credit initially, and based off of what you're telling them, they just kind of go off of that.
For like income and stuff.
Right. So
you're
income,
not really checking into it.
So basically, how much do you have in the bank for a down payment, and asking those questions, and based off of that, they kind of just give you a pre-qual.
Okay.
What I do on my end is I gather all the documentation and I give an actual pre-approval. So I'm looking at the income, I'm looking at the pay stubs or the self-employment income, the tax returns, all of that, the bank statements I'm verifying per the guide 2 months worth if that's the requirement on that program.
And another great fact with Rebecca is that she used to be an underwriter, so that's why she really digs in deep from the get-go to really get in there and see if down the line, because you could be 20 days into escrow and then something comes up.
Yeah.
So what is underwriting really for people?
So underwriting is basically they're checking the boxes, they're dotting their I's and crossing the T's on all the documentation that we've already reviewed. So an underwriter has a license, a government license for each program if it's a requirement, and they basically sign off, and with that we're able to fund the loan.
Yeah.
So.
Okay. What is it with bigger banks? Because I've worked at a big bank before where they're really, when you walk in, the mortgage person is just kind of a salesperson. They're not really taking control of the loan. The underwriters are third parties, right? So what is the difference between like Guild, where you work at, and a bank lender?
So I think to our benefit, and with Guild, I work 7 days a week, 24/7.
Yes.
So
that's huge.
Yeah, especially like during the weekends, if you have you need a pre-approval, like Saturday in the evening,
and it happens.
Yeah, and then you need me to call the listing agent to back up everything we've already said, as far as the file's already pre-underwritten, all of that jazz. That really puts us a lot of time ahead of the line and getting our offer accepted over others.
Well, and the fact that you actually pick up the phone on like a Sunday night is huge, because with the banks you don't get that. They're like East Coast underwriters or people that you're dealing with, and there's never anyone.
Well, especially in this business, and not being available on the weekends is hard. Or if you need an updated pre-approval and you don't have that capability to get a pre-approval on the fly.
Yeah. And I love that you do that too, Rebecca. After you, say I run an offer for a client, Rebecca will go after I turn in the offer to the listing agent, and she will call the listing agent and go over not really the file, but just to reiterate, like the file is safe. It's actually going to fund at the end of the 30 days. So a lot of people, there are lots of different mortgages out there for people. So how do you decide what is best for the specific?
So that's another thing. Having underwriting background, I can kind of with the information. So we go off of like the credit score, the down payment, what basically fits within your situation. So based off of the credit and self-employed, not being self-employed, do you need a down payment? Do you not? Are you looking for in most cases, 60% of the time we go conventional, but that also requires, good credit. And then you have where you're just starting out and maybe you don't have so much credit, or you need a lower down payment. Then we look at FHA. There's USDA where it's rural area.
But FHA now has higher rate or higher limits.
Right,
So
exactly.
Before it was what, like $550 or something?
Right, and they've also
now
said
it's gone
that
up.
their mortgage insurance is decreasing as
Oh.
far as the overall, and that just came out.
Oh, that's really nice.
Yeah.
Because you have to, with conventional, you have to put 20% down so that you can take away that PMI,
Yeah,
which
yeah.
is mortgage insurance.
Right. So with mortgage insurance, you have to pay PMI on conventional if you're not putting at least 20% down. But that varies based off of credit score. A lot of the time, I just had a guy today that he thought that we had to put 20% down and in order to avoid PMI, but we had it where that they were already getting the seller credit, so they paid upfront PMI, so they don't have a monthly. And
Oh.
so they use that towards not the buy down of the rate, but they used it towards their PMI, so they're saving $150 a month in PMI insurance.
Yeah. Extra
So it just
fees.
made sense to do that
Yeah.
for the life of the loan. So they're
Yeah.
paying the lump sum up front, and they're only putting 5% down. So if you
Oh.
think about that, it's like that's a huge
I
incentive.
see. So that's taking away their PMI with
Right.
them only putting 5% down.
Exactly.
Oh, wow.
Yeah, so they do
See,
have
that's a good
PMI.
workaround. You can
Right.
always work around things.
Exactly, and that's the thing. It's like, well, that's where we can get creative, and we can look
Yeah.
at your situation, and you don't have to save 20% to get into a house, and even to avoid paying your monthly PMI. So there's ways around it, and we get creative to see what we can do to get
Yeah.
you pre-approved, or make sure that you're warm and fuzzy with the payment.
Yeah, I love when you say warm and fuzzy.
Yeah.
Oh, she's
So-
warm and fuzzy with it. We're good. Another thing, I remember back in the COVID times, people were putting more money down to pay for points.
Yep.
So what is that exactly? Because that can get a little confusing for people.
Yeah, so with points, basically points are, so let's say you're getting a loan for, so let's say,
Like 5%.
yeah, okay, so you're paying 5%, your mortgage is, your loan is 400,000. It's 1% for every point, so that would be a $4,000 for 1 point. So why would somebody buy a point? Basically, a point is where you're buying down the rate. So let's say it's 6.99, and to buy it down a point to 5.99 would be $4,000. So those funds don't come to us as a lender. You're buying it down with the feds. That's what they're charging to buy down the rate.
Oh, I see.
And so,
But those funds are needed at closing?
yes, so they would be, so what it is we front the money as Guild does, and then it's within your closing costs at the end, because you buy the lock for 30 days, 60 days, whatever the lock period is. We do have segue into the lock and shop.
Yeah.
Is where they have, if you're not planning to buy, let's say for 60 days, but you want to lock in your rate now, you can always look at those options. So you can lock in today with the rates that it is today, and then you have 60 days to get the loan closed.
Yeah. Or to find a home.
Yeah.
And then
Close, yeah.
Okay.
90 days, but again, it just depends on if you would want to do a lock and shop, because you pay for the days that your loan is going to lock. So if you're buying within, let's say 30 to 45 days, I wouldn't suggest that you go with a lock and shop. So,
gotcha.
What
is that price range?
It just depends on where you want to lock in your rate, because do you want to buy down points? Do you not?
Yeah.
And that's where I can go in and kind of give a breakdown. This is where you're going to break even if you pay a point down. Right now, I'm not suggesting a lot of buy downs because obviously we don't have a crystal ball, but we're seeing that rates potentially could go down. And buying down a point now and then refinancing in 6 to 8 months, it just you wouldn't break even, and it wouldn't make sense. So why not use those funds to save and for refinance, where hopefully the rate would be even less at that point.
Right. So with the lock and shop, do they have to give you those funds right away?
So there is a required down payment. I believe it's $1,000 to $1,500, but I could price point that based off of
The specific person.
the scenario and kind of go from there.
And then going into the refis, because Rebecca does that as well. When someone is ready to refi, what are the typical costs that comes with?
It just depends. So if you have a guild to guild, so let's say you buy within guild, it's cheaper to go that route. But you're paying for the appraisal, you're paying the underwriting fee, you're paying the funding fee. So I would say $4,000, $5,000-ish. I mean, and then if you're not coming from guild, it could be more. So it just depends.
Probably right now isn't a good time to refinance.
Right. Yeah. Obviously now is not a good time to refinance, but there is people that need to take, with everything going up with food costs and all of that. There has been cash out refinances where they need to dip into their equity, and that's okay. Those things happen. And, and I've had somebody that was paying off credit cards, and it made sense because they were saving so much more, even with the higher interest rate.
Right.
So,
because that is also, I don't think people realize that when the mortgage rates go up, the rates are going up for everything. For credit cards, for cars, the rates are going up all over the place.
So I mean, it could benefit
20%, over 20% for credit cards.
Right, exactly. And if you're paying, let's say 7% now for, cash out refinance, you're still saving at the end of the day if you're paying all of that off and then just paying 7% on your mortgage. So it could definitely be a benefit for people that, a rate and term refinance, I don't suggest it right now.
Okay, going into credit. So what typically does someone's credit need to be at?
So a minimum, I would say, if you want like a down payment assisted, Washington bond requires 620 at least.
Okay.
I believe that FHA now goes down, well, Guild has an overlay, so we have, I believe it's 580. It has to be 580. But again, that's if DU, which is our automated system, approves it. So you have to go through the system, and if it's at a 580, sometimes it says you need to have reserves, which is assets on the side, and then
like a lot of money in your account or something.
Right. So sometimes they require like 2 months of reserve. So if your payment per month is like $2,500, you'd have to have $5,000 on the side in case of a rainy day.
Oh, gotcha. Okay. And when you do, lots of people like to shop for rates when they're about to buy a house. So when you run someone's credit, do they get dinged, or is it?
Well, right now, Guild has offered soft pull, so it doesn't. I don't know. I know we used to only do hard pulls, but now that it's a soft pull, so I believe it's less points, or I don't know exactly. Obviously, we're not allowed to talk with credit wise because we don't know, with how they deem that. But.
I remember too when I worked at the bank that people would say, "Oh, if it's soft pulls and it's for like 90 days or something if you're getting a lot of people, or maybe 60 days at the time." It was years ago. So because people would get lots of mortgage companies, checking their credit each time.
And that's the thing, and I always go into that with rates. It's if another company has offered you less of an interest rate, it's usually because interest rates we get a scorecard each day in the morning and sometimes throughout the day where rates come out. So if I'm quoting you, let's say 6.99 today, and then somebody offers you 6.75 the next day, it's just because the scorecard was different. So I'd say it's more about, do you jive with the loan officer that you're talking to and working with? Are they doing their due diligence by staying on top of your file, collecting all the documentation?
Communicative.
Exactly.
Do you trust them? That's a
right.
good one.
Right.
Okay, I think our last question is going to be about getting pre-approved. What kind of items do they need to get the process started?
So I would say the most recent bank statement and the most recent pay stub. That would be very helpful. That'll give me a start. And then from there, we can order the written verification of employment from the employer to get a breakdown of the last 2 years, because we do need a 2-year history. That doesn't mean you have to be at the same job. Now, if you're self-employed, we need the last 2 years worth of tax returns, and that would get us started there, and then obviously where your down payment would be coming from.
Sweet.
Yeah.
Okay.
So-
Well, in this small little amount of time, I think we've answered a lot of questions. But if you guys have more questions, you can definitely comment on the video. And I will link Rebecca's information as well, so that you have her information, that you can contact her with any questions as well. So thanks for watching.
Thank you.
And have a great day.
Bye-bye.